The financial industry needs to focus its energy on rebuilding confidence so that our financial system, the backbone of our economy, can provide more credit, better and more safely. It has to become, again, a driver for growth.
It's absolutely essential that banks do play a role in fostering growth. Banks should make available and should be able to make available credit for companies to grow and to invest. And in that sense, they have an important role to play.
The theme of today has been that how do we balance all the new regulations, all the costs put on banks with their ability to actually finance growth. We strongly support the move to make banks stronger and get more financial stability, but we also think it's important we don't overdo it, so we have the possibility of financing growth.
If you don't have stability, the system just doesn't work. So we have to ensure that banks are stable enough. The other dimension is, even if you achieve stability, you have to ensure that banks actually do their work as banks, i.e. provide the sort of long-term funding that the economy requires.
Very important steps have already been taken. Of course, the SSM regulation was recently agreed by the trialogue between the Commission, the Parliament and the Council. That's a very important progress. Secondly, the CRD4 is about to be finished, which is also good progress. I think the single most important piece which is still missing is a common bank resolution mechanism. The key issue is not more regulation, but better regulation. And I would say more harmonized regulation.
Des banques plus solides, qui détiennent davantage de fonds propres, de meilleure qualité, soumises pour la première fois à ratio de liquidité, des banques qui sont mieux supervisées en interne et en externe, et une supervision globale plus harmonisée au niveau central.
Improved supervision, increased capital and control of banks was and is necessary. I think the risk now, though, as usual, is that when you come from a lax situation, the risk is that you overcompensate on the other side, and we have to be careful to try and get the balance right.
Are we at the optimum point in regulation in terms of striking, so-called right balance between too much regulation and too little regulation? I think my main takeaway is that nobody's sure of that, and nobody knows.
Before the crisis, banks had 4% capital, up to 8% total capital. And now the new regulation, if we add in everything up, in the worst case we are above 20, maybe even 22% capital. You can say we have stacked up a number of things which are all of them looked at them when they came up, quite reasonable, good regulation. But if you add it up, then it probably gets a bit too much.
What we need now is a balance going forward to find the right amount of regulation, supervision and capital. But in the short term, there's an undoubted tension between increased capital for banks, which is causing some of them to deleverage and curtail credit, and the soundness of the banking system.
We together have to find the right way forward so we can create growth in Europe again.